Let's cover some life lessons on how to live and leave a lasting legacy. Hello and welcome to the Durham Talents channel. My name is Jesse Durham. For the first installment of a new series, these are going to be called Life Lessons, pun intended. We're going to be covering the living benefits of implementing infinite banking using properly structured whole life policies with mutual companies that pay dividends, those that are seeking to become your own banker as outlined in R. Nelson Nash's book, Becoming Your Own Banker. These are going to be some life lessons that I use frequently for Ask Me Anything sessions with clients or prospective clients. These are things that I use in live presentations for groups. And of course, this is going to be a series now that I want to be able to have accessible on our website and channel, YouTube, podcast, and everywhere else. So again, if this is coming only across audio, please feel free to check out our website and YouTube if the visuals would be helpful. But I want to convey some of the life lessons that I've had from having implemented the infinite banking concept for the better part of a decade now, both as a consumer and then, of course, over the last few years as a professional as well. Today's subject, today's life lesson is going to be on legacy. It's going to be on living and leaving a lasting legacy. So let's dive in on the legacy lesson. I live in a county where, to the best of my counting so far, we have had 8 generations represented. For those that are just tuning in, of course, I've got a picture of what I believe to be our children's great-great-great-great-grandfather's tombstone. Now, we are going to hone in on the finances, okay? I'm very proud of my heritage. I'm very proud of the legacy that I have in this place with the family that I do. So very proud. We've got a wonderful family. We live in a wonderful place, and I'm thankful for it. Financially speaking, I want to hone in on, financially, how to live and leave a lasting legacy. You know, some sayings come to mind right here. One is start with the end in mind from Stephen Covey. Another is plan as if you'll live forever and live as if you'll die today. That seems like a good way to approach life in general, but particularly finances as well. Now, this next picture is a picture of our sons up in a mulberry tree. Now, interestingly enough, my wife and I, we planted this tree when it was just she and I. We bought our property, we had our home, we were pursuing careers, we were doing some things outside on the property, and we planted this mulberry tree. And now we've had the benefit, because we did that years ago, now we've had the benefit of seeing our own children climb up in this substantial size tree that in fact we've had to keep pretty well trimmed and cultivated. And they're sitting up in the top of this mulberry tree right now in this picture, eating mulberries to their little stomach's content. And what a blessing that is. So again, while recognizing there are many ways to leave a legacy, I want to hone in on the financial side of living and leaving a legacy, because as much as that photograph brings me great joy, there are other aspects of our children's lives, and you can probably relate if you're tuning into information like this, that you'd like to be able to do that financially speaking as well. So in the realm of finances, what we've done is we've implemented a practice, a philosophy, a process that came from the book that I've already referenced, Becoming Your Own Banker by R. Nelson Nash. I read it in 2015. I've not put it down since. I reread that book at least yearly, I would say, if not more. And we adopted the process of becoming our own banker. Now, at that time, we'll dive in on this, but we adopted the process of infinite banking in our own lives. And Nash does give some principles that we use to change the paradigm that we were in financially. So let's talk about those principles of infinite banking. And here I'm showing a picture of a grocer, and that's going to be relevant if you've already read Becoming Your Own Banker. You know that R. Nelson Nash uses a grocery store as an analogy, as an example. But when he gives us these principles, the first one is to think long range. Now, just for a moment, think about the opposite of that. And because you're deciding whether this makes sense for you to adopt these principles, right? For you to take on this philosophy. What's the opposite of thinking long range? Thinking short term. Now, there's nothing wrong with thinking short term, but there would be detriment in only thinking short term. Would you agree? So thinking long range is the number one principle. Here is a quote from Warren Buffett. He says, "Someone is sitting in the shade today because someone planted a tree a long time ago." And you're probably already starting to see the theme that I'm continuing with trees. We love the outdoors. And this, again, financially speaking, how relevant. Trees don't happen overnight. You have to have a long-range thought process and belief to do something like plant a tree that perhaps you won't even enjoy the shade of or the fruit thereof, but others can. And I believe that's you tuning into information about living and leaving a lasting legacy. Okay. His second philosophy, his second principle is don't be afraid to capitalize. Now, this is going to be your own privatized system. And again, if I can stick with the tree analogy for a little bit longer, imagine a seed. Okay, if you proactively do something with a seed to plant that, then it can grow into a small sapling, then it can grow into a young tree, and then it can, of course, get to that size to where, like our sons were able to climb up in and enjoy the fruit of that very tree, the shade of that very tree, the height of that very tree. There was a capitalization phase that took place. Even in planting a tree, the same philosophy, the same principle will apply to finances. The third is don't do business with banks. We'll talk more at length about this on other podcast series that we have, on other playlists that we have on our YouTube channel, and then, of course, in his book, Becoming Your Own Banker. But just at surface value, recognize that banking is a business, and it's not yours. You're participating in that business, but it's not yours. You don't own that bank, and the bank probably doesn't send you dividend checks from its profitability, does it? Okay, so that's one thing that he talks about. And it doesn't matter whether you're a farmer, it doesn't matter whether you are a nonprofit, it doesn't matter whether you are just an individual, the average All-American, everything's financed with the bank. Business owners, same thing, everything with the bank. That's the conventional way. The next principle is be an honest banker yourself. Again, we're on this trajectory of living and leaving a lasting legacy. The best way to do that, I believe, is by becoming your own banker. And if you're going to be a banker, why not be an honest one? In fact, let's think of the opposite yet again. What's the opposite of an honest banker? Dishonest. Do you want to be a dishonest anything? And if you don't want to be dishonest anything, why be a dishonest banker? Now, the grocery store example, I already referred to it. It's a great analogy from Nash's book. He says that's just one example where you could certainly see yourself as both a consumer. You probably do, right? Enjoy groceries like I do. Okay, so we're consumers in the grocery business, and some folks are also owners in the grocery business. So that's just an example where you could see yourself as both a consumer and as a owner in a business. Well, the same is true with banking. We all participate in banking, but we don't all own a bank. We're not all bankers. We're just participating in somebody else's business. And then on that point of being an honest banker, don't steal the peas. That's a famous line from his book. So I reiterate it here. If you're going to be an honest banker, and I believe you should, don't steal the peas. You wouldn't take a can of peas off of your shelf and walk out the back door and let the customers and the hired help see you doing that, and family members or anything. So be an honest banker. You want the grocery store to be profitable if you're in the grocery store business. Banking, the same applies. And then the last, rethink your thinking. Again, I commend you. I sincerely do commend you. Someone that would take time to listen to something about personal finance, about legacy. I commend you in your dedication to learning and expanding your thought. I would encourage you to question everything. Question everything here. Question everything everywhere. Be open to rethinking, though, your thinking. That's my encouragement. So with these philosophies, and another further quote from Warren Buffett, if poor people would just do what rich people do, they wouldn't be poor anymore. I'm going to repeat that. Warren Buffett says, if poor people would just do what rich people do, they wouldn't be poor anymore. Okay, so on that last principle of rethinking your thinking, if our prior thinking has got us to where we're at and we're unsatisfied, we see another level, perhaps rethinking our thinking would be beneficial. Now, we have talked about the process of implementing these 5 principles from R. Nelson Nash to live and leave a lasting legacy. Now we arrive at the product. I do believe that there is an ideal product, an ideal entity for your own privatized banking system, a banking system that will play into your legacy moving forward. Okay, a legacy that you'll have in your lifetime, that you live out, and that you also leave. That entity is a properly structured whole life policy with a mutual company that pays dividends. Now, I believe that there are several characteristics that make a properly structured policy with a mutual company, a whole life policy that pays dividends, the ideal asset. There are several of them. In fact, such as
transferability, guaranteed growth, liquidity, tax-deferred and tax-free benefits, protection against volatility in the market, litigation protection, inflation protection. It's easy to manage. There are no hidden fees or penalties. It's reputable. It's safe. It is consistent. It is permanent. There is private ownership. There is control. There is guaranteed growth. And there is a highly respectable anticipation of a dividend.
In fact, when I pulled up an estate planning definition online, you'll notice that insurance was right there in the definition. It says that the legal definition of estate planning is the arranging for the disposition and management of one's estate at death through the use of wills, trusts, insurance policies, and other devices. Now, I don't think that this surprises anyone. When most people think about legacy, when most people think about passing, they think about those conventional tools and products. So whole life insurance is known for when you kick the bucket. It's got these death benefits, okay? Those leaving benefits, if I use my own language there. When you leave, you're leaving something behind, the death benefit. And that's where most people and their understanding of life insurance in general, particularly whole life insurance, stops. When I kick the bucket, that's what I'm going to leave behind is a death benefit, that leaving benefit. But there are many, many living benefits to implementing the process of infinite banking with the product of properly structured whole life policies. Okay. Now, there are several of these. I know this is our first life lesson on legacy. There are several where I'm going to lay out where how we interact with land, for example. Okay. Real estate can have living benefits by implementing this process, and it can have death benefits as well, where leisure, the things that we do for fun, can be covered. Lending, such as family banking, keeping more money in the family, where your loyalties lie. I enjoy very much giving charitably. You probably do too. We can cover that, how you can do more of that in your lifetime and more of that than you otherwise would have in your passing as well. It's a really neat thing here. Lifestyle, whatever your recurring expenses happen to be. Financial liberty, financial independence, financial autonomy. We're doing the lesson on legacy, which is intergenerational planning right now, leaving an inheritance. We will cover leveraging liabilities. Okay, if you have debt, we can show you how to pay off that debt and get the money back. You heard me say it. I said it that way on purpose. You can pay off debt and get the money back. You can actually leverage your liabilities. So, can whole life insurance as a product account for these needs that we have when we pass via that death benefit? Could a family member pay off a mortgage with your passing, and you protect them and cover them in that way? Yes, that's a wonderful and a beautiful and an honorable thing to do. Could you increase opportunities for the next generation simply by leaving a tax-free windfall via a death benefit? Absolutely, of course. And then just go down the line, and there are several more. These are just the first several that we're going to cover. But there are living benefits, okay, for those that are implementing this process of becoming your own banker, using those 5 principles in this product. There are these living benefits. So, here's what it looked like when we got started. Me and my wife and our 2 sons. Now we have our daughter as well, of course. But when we got started, we read the book in 2015. We were about $50,000 in debt. And we had a lot of life still ahead of us. Growing as a family, of course, I've already referenced that. We had lots of things. In fact, when you look at the first 5 years of once we implemented the infinite banking concept, once we had implemented it, got that first policy, paid that first premium, immediately started using that policy to pay off tens of thousands of dollars of debt, we still lived life along the way. And that's why I'm focusing in on how you can live a legacy and leave a legacy. See, we had that $50,000 worth of debt, but we still wanted to take vacation. We still had family weddings that were going to come up. We still had travel. We still had business. We still had property taxes to pay. We still had other things to do in life. And this is just a snapshot that I'm illustrating and describing for everybody here of what those first few years looked like for us. We did make thousands of dollars of renovations in our home using this process, using this product, I'm telling you. We did make a couple of real estate deals. We did finance some business equipment. This studio equipment that we have here in our home office that we work from, that was financed from our private banking system. So total to date, we own 6 policies as of 2023. We own 6 policies. We did pay off tens of thousands of dollars worth of. We had it all, folks. We had the credit cards. We had the car note. We had the student loans. Okay, we were just that average all-American out there bleeding out interest dollars to the conventional banking system, not being well positioned to leave a legacy for our children and certainly not to live out one. But because of this process, adopting these principles, using and implementing this product as our own private asset, we were able to take family vacations. We were able to pay off those debts and just do lots of really cool things. And a lot of life happened in the meantime. Another child being born, of course, starting a business, career changes, homeschooling our children. But in those first few years, we started those first 3 policies. And here's a big note that I'd like to point out that I didn't even grasp when I'd gotten that first policy, I don't believe, or at least not to the level I do now. There are a couple of ways to contribute to your net worth, okay? And that's a very relevant term for those that are considering legacy, okay? Net worth can be built. You pursue your career, you build your business, you make investments, you do things, okay, to be able to build up your net worth, to be able to own more than you owe, okay, and get that up to a number, perhaps. There's another way. You can buy your net worth. And that was a novel concept for me when I first, and I was exposed to that idea through infinite banking. When you buy a whole life policy, you're buying for that future generation a tax-free windfall of capital. A tax-free windfall of capital. That is going to be paid out to heirs and beneficiaries. So by paying depreciating dollars today for this appreciating asset, we are procuring a guaranteed tax-free windfall for the next generation. It's a beautiful thing. Now, again, I do think that everyone should have adequate protection from the start. From the very first policy that you get, you should have adequate protection and coverage. And yet, there's going to be so much potential in how you use this private banking system, so much potential for that number to increase and just keep growing, which is really a really amazing concept. But you can buy an appropriate amount from the start, and then you can build it from there. So visually, again, we got our first policy in 2016. It wasn't 6 or 8 months later. We knew we wanted to go ahead and get our next policy. It made sense to get coverage on both myself and my wife. So the first policy was on me. The second policy was on my wife. And we just expanded naturally from there in using our policies in our lifestyle. This was a lifestyle that we had adopted in becoming our own banker, in living a legacy out. We began paying those debts off. We began recapturing interest. We wanted to do more of that. Of course, we were growing and expanding as a family, so we did cover the first generation in our family. Then we did begin to cover the second generation, getting a policy on each of our children, of course. And looking ahead, we're not done. You know, the idea in leaving a legacy is that you build out a system of policies that account for all of your needs of finance. So that's the living it out part. So you can, over the course of your lifetime, build a privatized banking system that accounts for all of your needs of finance. And then that sets up the next generation at a completely different starting point. And it's because of thinking and acting and planning intergenerationally. I love this quote from Jim Rohn. Again, sticking with the tree analogies and the tree quotes. It's a good one, though. Jim Rohn said, "You never heard of a tree growing half as high as it could." I love that. Okay, so if trees are going to strive like that, I certainly think that we should. And then here's a visual. So just like my wife and I started out something new, this new paradigm, this new financial paradigm of becoming your own banker. And we got policies on ourselves and we used those policies. Again, folks, I'm not talking about just getting these policies. I'm talking about using these policies. I'm talking about living out a legacy. We did the same for our children. And then you can even think the other way around, of course. You could think, well, maybe we should reach a generation up as we grow and we expand our system. Perhaps you should be considering getting policies on parents or grandparents because they will have their eventual passing. And that's a beautiful thing to see, that a family is planning and acting together intergenerationally, in that if you are interested in helping provide passive income, supplemental income for a grandparent or a parent later in life, by owning a policy on them, you could facilitate that. And then at the time of their passing, they could be facilitating that tax-free windfall to the next generation. But wherever it starts, whether it starts with you, okay, because again, financially speaking, 8 generations in the same county here in North Carolina where I'm from, that's pretty cool. But financially speaking, what translated from one generation to the next? My wife and I started from scratch. We paid for the property. We paid for the home. We paid for the car. We started from scratch. And I know that so many people do, and that's why this is such an important and an interesting topic for me, because I want a different starting point. So wherever it happens to start, it can look like this. You've changed the paradigm via these principles, this process, and this product. Okay, we're born into financial slavery, being indebted to the commercial banking system. Many of us, if not all of us, most of us, let's say most of us, starting from scratch. Every generation just starting from scratch. But that doesn't have to be the case. You can live out and you can leave a lasting legacy. And I do believe that these tactics will be helpful. All right, so let me reiterate here that you may be the one that starts this for your family tree. It would behoove you to consider reaching up. Okay, once you have adequate coverage on yourself and you're utilizing those policies, perhaps you need to reach up. Get a policy on a parent or a grandparent. Perhaps they want to reach down when you have a discussion about becoming your own banker, about implementing this infinite banking concept. They may be the ones with money that they want to be getting policies on you or on grandchildren, or both ways, of course. And once one generation's policies pay out, or even policy may be as small as one, the windfall of capital, that windfall of death benefit, tax-free death benefit, can fill the reservoir of the system that you've built up and create a self-sustaining system from there on down. You follow me? The death benefit from one policy could be enough, but maybe from a generation's policies can be enough to create a self-sustaining, privatized banking system for there on out, which is an amazing concept. Ownership of policies can be transferred. So if a grandparent or parent does get one on a grandchild or child, ownership can be transferred at the appropriate time. These are private assets. Okay, so you could transfer that ownership. The ownership of the policy could be placed in a trust if that's what you choose to do. And I'll say this, when it comes to trust, a policy in and of itself, a properly structured whole life policy with a mutual company that pays dividends, is essentially a pre-engineered tax-free trust in and of itself. It is the ideal financial asset. So when that first generation starts this new paradigm of being your own bankers, I mean, just imagine that. Just imagine being part of a family where the theme, the philosophy, the paradigm is we, the Durhams, the so-and-sos, the you, we're our own banker. What a beautiful concept. And that death benefit does transfer tax-free. You can create a self-sustaining system moving forward. And when it comes to your philanthropy, here I've got a title for those that are just tuning in, the philanthropic philosophies of this concept, okay? The philanthropic philosophies, perpetuating proactive and productive progeny. Here are a couple of takeaways I want to leave you with as I was preparing this life lesson. This is a picture from a trip in Canada, Eastern Canada. My family and I had taken a 7-day cruise, I believe it was. I mean, we were gone for about a couple of weeks. We were seeing and visiting and touring and tasting in New England and Nova Scotia and New Brunswick and all these different places. I believe this is Nova Scotia. Here I'm on top of a cool wave, plastic. It's a man-made wave at a harbor that we were visiting. And clearly, after I'd gotten to the top, my wife took a picture of a stone that says, "For your protection, do not climb." Well, I enjoy going to the top of things. And I was already up there. And she was taking a picture for me and of me. And did so with this sign, which was just hilarious. And here was my takeaway in looking back on this picture from this vacation, which we financed from our private banking system, by the way, just so you know. It was a great time. It really was. The takeaway here is start with yourself. It has to start somewhere. If it's going to be different, if it's going to be better, start with yourself. Lead by example. And now I've got a scripture for you here if that interests you. A good man leaveth an inheritance to his children's children. That's Proverbs 13:22. Well, as it happened, the next picture that my wife has is of me at the top with a big smile and my son halfway up the same big wave. And this is a big wave, folks. I mean, this is several times taller than I am. Again, if you're not seeing this picture, it's several times taller than I had to get a good running start. And here comes my son climbing up this wave. And I take a picture at this point looking down at him in a moment, which is really cool. But this picture reminded me of how establishing a new financial paradigm is going to mean that it's a new influence, a different kind of influence, an out-of-the-box influence, an unplugged from the matrix influence on our children. Again, the Durhams, we are our own bankers. That's our philosophy. And the scripture that I came up with here was, train up a child in the way he should go, and when he is old, he will not depart from it. Proverbs 22:6, you know. This picture of me looking down at my boy coming up, seeing his determination, seeing his will to come up where daddy is. And again, that's the point here. And this one is this third takeaway that I'm giving you is more caught than taught. We can tell them things, okay, you parents, you can relate. We can tell them things left and right, but they see what we do, I think, more closely. And then the reference to scripture that I made here is, for riches are not forever, and doth the crown endure to every generation? From Proverbs 27:24. I don't know what our children are going to do, is the takeaway there. But I do know that I want to facilitate whatever their gifts and their passions and their drive and their purpose is. I want to facilitate that from a financial perspective. Again, I'm so very proud and appreciative of my heritage. And financially speaking, I just want that to be a strong suit for our family. And if you want that to be for yours, I want to encourage you in this life lesson. Here's a little video right here at this park where we were visiting in the harbor, where my son and I just chatted it up for a second. I'll cue this for you so you can have a little insight on us just having a good time on this vacation where we had been touring and doing some amazing things in brand new places. We'd never been here before, all because a few years prior, we implemented this concept into our lives and we were taking this fun family vacation.
Okay, so Jacob and I just climbed to the top. We're going to stand up here and show you. Just climbed to the top of this wave right here in a park on the boardwalk of Nova Scotia, Canada. We're here in September 2017. It's pretty steep. He climbed right up it. All right, Jacob, slide on down. Watching you. Woo. It's really pretty steep. Having a lot of fun here in Canada.
And then one more tree quote for the road. Jim Rohn says, "If you don't like how things are, change it. You're not a tree." So this is normally, of course, where I will field some questions for our live presentation. Otherwise, what I would like to do is say, if you would like to have a conversation about how to implement the infinite banking concept into your household or your business or your investing so that you could live and leave a lasting legacy, I would encourage you to read R. Nelson Nash's book, Becoming Your Own Banker, and then you can contact me and watch a free presentation to introduce you to the infinite banking concept on our website. It's durhamtalents.com. And I do look forward to our next conversation. I hope you have a great day living out and leaving a lasting legacy. Take care.